Many are predicting that cryptocurrency and the stock market in general is going to continue going up as Trump enters office. But there's an economist who has been successfully predicting downturns in economies and industries for decades who says otherwise. Harry Dent has a unique approach to economic forecasting, focusing on demographic trends and consumer spending patterns, and he makes his position very clear on where this is all heading. Are we going to see Bitcoin hit ridiculous all-time highs, or will the coming economic enema do a much-needed deep clean on the everything bubble? Let's discuss the key trends and signals that you'll want to be aware of on this Hold On to Your Lug Nuts, episode number 759 of the Bad Crypto Podcast.
5, 4, 3, 2, 1, 0, ignition.
Who's bad?
Greetings, Lord Travis Wright, and greetings to all you in the Republic of Bad Cryptopia. How you doing?
I'm holding on to my lug nuts.
Yeah.
D's.
I can't see your hands, so you may well be holding on to your lug nuts, in which
You
case...
told me to, so I was like, when can I stop holding on my lug nuts? I'm gonna let go.
But you're going to want to hold on to them this whole episode. This one is, it's going to get you emotionally. There's no way you're going to be able to listen today and not feel something as Harry shares his perspective on where this is all going. You might feel it might cause fear. I don't know. It might cause panic.
Yeah, but don't shoot the messenger. Don't be like, F you, Harry.
Yeah.
Because it's not helpful. He's
Yeah.
he's trying to share his wisdom with you. And you're all over there being all aggravated and like, don't be like that. Don't be that guy. Don't make me come over there.
You don't want Travis to come over there.
Yeah.
Well, tell him to bring a couple brews and then he'll be fine. Or bring a doob. If you say, hey, we're smoking up when you get here, then he'll show up on your doorstep smiling big.
Hey, you know what? I'm very rarely angry. My anger seems to go away like over like woof, like and I'm like, what was I mad about? I don't remember.
Yeah, I think it's a little thing called self-actualizing that we happen to get better at as we get older. But
experiencing anger right now. Wow, look at
peace.
that. Look at this meat suit. Yeah, that's floating around.
It's so meaty. So speaking of meeting, you guys can meet us. We want you to come to the biggest Bitcoin conference that is taking place this very month in Miami. It's WAGME. We all going to make it. WAGME.Miami. It's taking place in Miami, January 22nd through 24th. Travis and I will be there together. I think this is the first time that we'll be at an event together in something like 2 years. I think was the last time we went to an event, and
I think it was 3 years.
Maybe 3. We're going to be on the main stage on day 2.
No. It was 3. Yeah, it was in Puerto Rico, and it was at Blockchain Week
Coin Agenda
2022. So yeah, it was about a little over 2 years ago.
There you go. Well, this will be fun. We got a presentation and we're going to be hanging out with you guys, do some podcast recording there. And we have secured a discount code for you. That's right. For you, 30% off for listeners of the Bad Crypto Podcast when you go to wagme.miami, WAGMI.Miami. Not going to spell that. Put in code BAD crypto for 30% off. I think that this conference is it's going to be so fun, right? Because everybody is super enthusiastic except Harry Dent. No, it's not that he's not enthusiastic. Harry can't come. Sorry, Harry. Listen,
Dude,
I don't want to.
He kind of reminds me of those, those two angry Muppets, the ones that are hanging out.
Statler and Waldorf.
He's kind of like Waldorf.
Listen, I don't want
to. You're gonna love this. You guys get an interview. Let's go.
Yeah, let's get into it. The sky is falling. The sky is falling, or maybe it's gonna fall someday, but not yet quite today. We have with us today a prognosticator, not a Nostra dumbass like Travis, but a Nostra. Well, I don't know what the right name would be for Harry's Nostra word, but Harry Dent is with us. He is an economist, a financial author, an investment strategist, and he makes all kinds of economic forecasts and market predictions, many of which have come true, and some we're just waiting to see if they're going to come true. He's here today to talk about the future. Welcome to Bad Crypto, Mr. Harry Dent.
Hi, Joel. Nice to be here.
Say hi to Travis too. His feelings get hurt.
Travis? Hey.
This is the Joel show. I'm
Don't
just
get
the
your-
other guy.
Don't get your feelings hurt, Trav. It's fine. Don't get your panties all in a twist over there, Travis Wright. It's not
I'm
very
really excited to talk with this dude from Harvey Dent. Isn't like a Batman supervillain? Two-Face?
Everybody wants me to be. They said, you're that guy from the Batman. I said, no, that's Harvey, not Harry.
the other guy. So we're actually
His brother.
neighbors.
You're his brother. That's it. Harvey's my brother. It's cool.
You also live on the island here in Puerto Rico and within the gates of Palmas del Mar, where we reside. And I've been trying to get you on the show now for about 3 years. So I'm glad that you finally made it. And you made it during a great time because many of us feel like we're about to see, in spite of the trillions of dollars of debt, an economic boom in the United States. But I want to set the credibility here because there's several things that you've predicted over the years that came to be. You predicted that the bubble was going to burst in Japan in 1989. And what year did that happen? Actually, when did the bubble burst?
It was 90 to 92.
1992. You
And
predicted.
I got so much flack on that. Everybody, I was speaking to all these small business CEOs around the world at Tech and Vistage, and they were saying, no, Harry, you got it wrong. Japan has got it right, and the U.S. is going to hell in a handbasket.
Well, so you were right there, and you're kind of right on the other. We just haven't seen it manifest yet. You did predict that the dot-com bubble was going to burst in 2000, and being a website owner since 1995, I can vouch that that did indeed happen. You predicted the housing market crash in the U.S. 2006, 2007. That happened, and you predicted that Donald Trump would win the presidency the first time due to the populist movement that he was leading. So you got a lot of things right so far.
Well, the biggest thing in the early 90s, I came up with my first book, The Great Boom Ahead. And I said we were about to see not just a boom in America, but the greatest boom in history. And again, got nothing but criticism for years. And the next thing you know, 95 to 2000 happened. And then I was a hero.
So you have been writing for years, though, about how the U.S. is over-leveraged. And because we are so deeply in debt, I think probably for the last 25 years, you've been saying we are on the verge of the second Great Depression. Is that an accurate way of positioning it?
Well, yeah, I'd go a step further. What really happened was that we predicted in my early books that by the end of 2007, the giant baby boom generation would have peaked in their spending cycle, the largest in history, and we would go into a long downturn from 2000. And we said it way back then, 2008 through 2022 would be a long downturn due to the baby bust. Gen X, fewer and fewer people to drive our economy. But what happened once we crashed in 2008 and early 2009, once that deepest crash since the Great Depression started, governments pulled out the printing presses for the first time and said, you know what? We don't have to have recessions anymore. We can print money and cancel them out. And $27 trillion later, we had the greatest stock market boom ever, precisely when the fundamentals, both in the demographic generation cycle of spending and ultimately from 2020 forward, another technology cycle we have that's very powerful, when the cycles were at their worst in history. So what I'm saying now is we skipped over a depression. And number one thing, you got to look at history. Depressions follow bubble booms. Recessions follow normal business booms, okay, and consumer booms. So we basically blew our way out of a bubble burst. And you know what they did? They just created a bigger bubble. 2009 to 2024 now has been the longest, greatest bubble in all of history, times 2.5. Okay. Most bubbles have never lasted more than 5 to 6 years before they blow out from their extremes. But when the government's behind it and throwing trillions and trillions of dollars at it. So I don't 100% know what's going to happen here, but I know we can't get away. And I think this bubble is now going to burst probably between here around late 2024, early 2025, and 27. And most major downturns take 2 to 3 years in the stock market, including the Great Depression from 29 to 32. That was 2.7 years, stocks crashing. I think we're going to see this crash now. I don't know exactly how it's going to work out because it's never happened when things are more favorable. The millennials, basically, the reason that this tightening, massive tightening the code over COVID did not hit the economy harder as everybody expected was because the millennials stepped in with their big boom starting at the beginning of 2024. So we have positive demographic forces after 12, 13 years of negative from Gen X, but we created this giant bubble. And as you said, the biggest debt bubble, and debt bubbles always drive financial asset bubbles. You won't see those two without each other. So we have to shake out this financial asset and debt bubble. And I think it's going to be painful in the next few years. They may put it off a little longer, but I don't see how we go ahead without having to deal with this.
Yeah, it's really fascinating, your work. I mean, there's a lot of, if you go through, I don't know how many you've written, but I've seen The Great Boom Ahead, 0 Hour, and The Demographic Cliff.
2000s was my best-selling book in 1997, 98.
Right on. What's the last one you've written? The most recent.
Gosh, I had that. The 0 Hour was the last one.
0. Okay. So it's really fascinating how we've just entered 2025 and the start of the beta generation has begun, right? So all babies now moving forward are beta, which is a horrible name for them. I think they're probably going to come up with something else as they get.
Yeah, they're going to sue the world for that.
Like, I don't mean the betas.
Beta cucks.
Yeah, this is the worst one ever. And so, because reading what you've written before and put some emphasis on some of this stuff, now we're entering a whole new administration, right? And so you predicted, 25, 26, 27 is going to be horrible. Well, Trump's coming in and they're like, wait a second, they obviously don't want it to be horrible because then the Democrats will be like, oh, see, it's the worst one ever. Then they're going to talk about any of the history. They're not going to know any of the stuff that you've been talking about since the 80s as how it's going to be happening. And so they're going to say, oh, it's all Trump's fault. So I could see them sort of pulling the triggers to try to do a controlled demolition on the economy, like they tend to like to do these controlled demolitions on things. And so my question is that what can maybe be done to avoid it? Because you mentioned 07, 08, 09, they turned on the printing presses. Is now maybe the strategic Bitcoin reserve? What gets us out of this relatively unscathed, or does it all just have to come crumbling down?
Misconception by everybody, and mostly economists, that recessions are bad. Recessions are the enemy. That's like saying, oh my gosh, most people sleep 6, 7, maybe 8 hours a night. What a waste of time. Why don't we eliminate sleep, damn it? No, sleep is absolutely essential to human functioning. So, and just try not sleeping for 3 or 4 nights. You will be a certified crazy person, okay? Recessions are natural. You have to boom, you have to expand, and that expansion actually is not only driven by new generations going up their natural spending family cycle, and that was my contribution to economics. I can time that down to the year. I predicted the 2007 peak all the way back in the early 80s when I came out with my research, okay? So that's a long-term predictable thing. The problem is, then you have recessions. Well, what recessions do is recessions are just wiping out the excess capacity from the old technologies. And guess where all the innovation happens if you look at history? During the downturns. when times are tough. People innovate when they're challenged, not when they're nurtured and everything's going hunky-dory. So the recessions bring the innovation, they cleanse the economy rapidly. It's a good thing that we quickly flush out stuff, in just a couple of years, rather than having it weigh on the economy forever. So the problem here, we have gone now 15 years without a recession. The longest ever has been 10 years. And they're typically about every 8 years throughout history. So
just keep on kicking the can down the road,
a flushing
right?
out.
Yeah.
So what you're
flush.
kind of, yeah, you're saying that we need an economic enema of sorts,
Yeah,
right?
exactly. And yeah, enema is more. I just don't say that in public because people are a little creepy about it.
And we're fine with here. Somebody talked to me the other day about a detox that they're doing, and he said also they've got like this coffee enema. I'm like, I don't put coffee down this hole. It's definitely not going in that one. I mean, talk about a wake up call. I think I'm going to pass on that. So, is it possible with this new digital age that we're in with cryptocurrency that Bitcoin and adoption of these currencies can soften the blow so that we're able to have the recession, but somehow it's cushioned a bit by these emerging currencies?
Think about this for a minute. If this is a bubble, which it is, and it's the first everything bubble in history. I've studied bubbles now all the way back, as far as there was financial markets in the late 1700s. What's the biggest bubble out there today? It's freaking Bitcoin. It is crypto is a new emerging financial asset innovation, a giant one in history. It's in its early stages. And that's where you have bubbles when the technologies are new and have all this promise. But since you can't quantify it, and since people don't understand how much resistance there is to new change in technology, people blow it up and make it worth more. Just same thing with the internet. The first bubble was around the internet. Oh, the internet's going to change everything. It did, but it's still overvalued. It still had a major crash, 78% stock crash during a boom. So that's what happened. So we've had this second bubble, and now it's been stretched. This bubble has got to crash. It has to bring down these financial assets and all these things that only weigh on the economy now. And then we will have, the next boom. But in the United States, our millennial generation only has strength into 2037, not as long as or as much as the baby boom did. And then it plateaus out forever, for decades. But I mean, we're not going to see ever in this country a boom like 1983 to 2007, which again, by all this stimulus and bubble, got extended to here recently. Okay, we'll never see this again. Bubbles come in 90-year cycles. It's about 91 years to be more precise. You look back 1929, and then you come into this era. 2019 to 20 would have been the natural peak in this bubble cycle. You go back before then, 1836 to 42 crash. The bubble bottoms, 1842, 1932, and then recently 2022, are 90 years apart. And we didn't get to have this 22 bottom because governments stimulated their way out of this. So I think that bottom's going to come later. But that's just the point I make to people. And I learned this early in my career because I majored in economics in college, and after the third course, I'm like, these people can't predict anything. They don't even think the economy is predictable. They don't understand it. And I'm like, why am I studying this? Well, I did my research on the side while I was consulting to businesses, new ventures, seeing a new economy emerging in its early stages while the old one was peaking. So I was at Bain & Company consulting to Fortune 100 companies, the old, and then I ended up consulting the new ventures in California, seeing the new economy. So, I just dug in and did my own research. And guess what? The economy is incredibly predictable. New generation peaks, 1929, 1968, 2007, 39 years apart. Technologies come. Two waves of technologies come every 45 years, about 22 years apart from each other, So, and new technologies come in slowly into niche markets. And then in the same time it takes them to go to 10%, they go to 90% adoption, like automobiles all of a sudden did in the roaring 20s, and microcomputers all of a sudden did in the 90s. So all of these things that people say, well, nobody could have seen that coming. No, wrong. You may not know exactly what it is, but you can see when these cycles are coming. And that's why I was standing on a rooftop in the early 80s saying, people say the US is dead and Japan's going to take over the world. And I'm like, no, 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 no. We got the biggest damn baby boom in the world, and we're going to be the ones kicking ass, at least into 2007. So, I mean, but it's simple. 46, my favorite indicator, which I had from day one, 46-year lag on the birth index, which I have to modify for immigration, but I can do that. It's a little more complicated. And that in 46 years is the average peak in spending of the average person. Okay, simple statistic. On everybody doesn't peak at 46, but average happens, and that's what causes booms and busts in our economy every generation. And it's the simplest indicator ever. And economists still, I've been saying this for 30 some years, out in public, books all over the place, and economists still don't accept this.
Yeah,
they think phenomenal. It's all about government policy. You know how much time I spend looking at government policy? Almost nothing.
Right.
These guys don't matter, thank God.
Right. Hey, Joel, could you pull up this chart here? This right here, scroll on down to the middle. It's like a chart that's been correct over and over and over again. It's from 1875, where this guy, what's his name, Benner, Samuel Benner, predicted some of these patterns, and it's really wild. Like, how accurate have you seen this? Because it's like timing in with 2007, some of these other things. It does seem like these are good times to get out of certain things. Like, there does seem to be some method to the madness.
There is, and I think this is that like kind of 16 to 18-year cycle. That is more of a commodity cycle too. I mean, and commodities, by the way, in modern times, 29 to 30 years is more the cycle. Technologies is 45. Generations, it's 39. Every decade, if you look at ever since World War II, every decade just about, we have a recession in the first 2 to 3 years. So 80 to 82, and then 90, and then 2000 to 2002. And then 2008-9 was from the demographic downturn. So that head that one off at the pass. And then 2000 to 20 to 22. Every other one, so every 20 years, the recessions are worse. There are cycles, and they repeat pretty darn well. There's always some new twist, and there's always cycles we don't know about that may be hitting. But yes, I mean, I just have to deal with the fact that all I have to do is go out there and say, the economy is far more predictable than you've been led to believe. And people just look at me like, no, you're an idiot.
Yeah, Joel, like you were talking about, the economy needs an enema. I was like, it would be a good word for that, an economa.
Yeah, you're going to be able to get this over the counter economa to flush your economy and get you feeling prosperous again. So with that chart, it showed that if that's true, that 2026 is peak sell time, and then it goes down from there. And I could totally see that happening given the enthusiasm for Trump taking over right now, with him going to instill tariffs on these other countries, or at least threaten to lower our taxes, bring energy back to the US, at the same time as talking about making this Bitcoin reserve. There's so much bullishness, especially in this year of the 4-year cycle of Bitcoin. And, as we look at the past, it doesn't, always repeat, but it certainly does rhyme, as you say. And here we are with this, I think it was a $36 trillion on the debt clock I pulled up there. And at the same time, this Bitcoin and cryptocurrency is a totally new thing. I mean, during all of these cycles, we've not had new money, so to speak. Right? Everything was backed by gold. Nixon screwed that up. We've had fiat currency, but this is the first new financial instrument that we've had in decades. And so do you think that somehow that kind of fudges with the trends, and maybe things don't go bust quite as quickly?
No, I mean, because all of these stuffs in these cycles come together. Okay. I mean, innovate. Somebody say, well, yeah, Bitcoin's a great innovation. How can we have a downturn? Because every the Great Depression was basically the growth boom of the whole auto and electrical industries, the biggest thing back there in history, finally taking a shakeout as any industry does. You get 40 companies come in, auto companies, and then they fight into the greater markets of the roaring 20s, and then you get the Great Depression and the downturn, and it shakes down to 3. That's part of the cycle. It wasn't a mistake. Great Depression wasn't a mistake. The bigger you let the bubble get, and the way you limit that is not letting debt and lending go crazy, but you're always going to have debt in any boom, and debts are always going to fail to some degree. It's just a matter of degrees. So these cycles are more important than this. I don't care that Trump just got elected. Yeah, he may give a little boost for a little time. If I were advising him, I'd say, Donald, wait another 4 freaking years, okay?
Say Mr.
Come in
President
now.
to him.
You're coming in at the top of a bubble, like people like coming in 1999, 2000, and then have this bubble crash. You get blamed for it. The early 80s, my God.
Trav, do you think that
Carter didn't stand a chance,
Do you think, Travis, that maybe this could happen concurrently with the bear market that is inevitable, because Bitcoin does, along with the rest of the crypto market, crash really hard after a bull run, and if we're looking at past history, that run's going to continue well into 2025. But then watch out, exit liquidity, and I could see the stock markets moving that way at the same time. What do you think?
It seems like some of that stuff's going to happen. I mean, we know that things don't go up and to the right forever, right, Harry? I mean, they always got to correct a bit. And Bitcoin's been on this terror, and some people are saying, "Oh, Bitcoin's going to hit, $250,000 Bitcoin." And it is interesting, and I would be curious to learn about what you think about how these Bitcoin strategic reserves, when all these countries start compiling and growing and stacking as much Bitcoin as they can, is there a way to maybe kind of divert some of this crash? Because it could be a historic crash. We've been talking about this for a long time. There was a book that came out in 2017 or 2018 that we've referenced many times called The Everything Bubble. And it's almost like, everything's been kicked down the can, everything's been kicked down the curb, and here we go. It's all going to avalanche on us, and it would seem like the deep state would like this to happen to Donald Trump, and so it seems like it could potentially probably happen.
So as usual, and it's just because I have different indicators and look at things from a different perspective. I don't try to be contrary. Bitcoin, I am the most bullish guy on Bitcoin long term. I see Bitcoin becoming, it's going to take a couple decades, becoming the backing for all currencies. So it will be the digital gold. It is not today. It is not widespread enough. It's not accepted enough. It's too volatile. You can't have something. It's the most volatile asset, major asset out there today. In its maturity, in my projections, just a simple tracking with Amazon. The last revolution was in the dot-com revolution, 20 some years. So you get 2 of these every 45 years. So that's why, about 20 some years ago, Bitcoin and crypto is a part of the next revolution. Okay. So it will not be mature until the late 2030s, early 2040s. And at that point, Bitcoin could be worth roughly 800,000 to $1 million a coin. And at that level, it would be worth more than all the gold in the world. And it would be something that could continue to grow with a digital economy, and gold used to grow with a material economy. So this is the new gold. It's not ready to be it yet. It does have to grow and prove itself. There is going to be no talk of a strategic reserve in Bitcoin. When it crashes, I think it's going to go back down to the last low, 16,000. When it crashes that much, anybody use that to back anything? It's volatile because it's early stage, just like anything is. So again, though, it's the only thing that is digital. It is limited even more than gold to keep that kind of durable value over time. So it is the perfect standard for a global economy. You can't tie it to the US dollar or the Chinese yuan or something. That is not great. And I think the biggest thing is going to lay the ground for this Bitcoin being eventually the universal standard is this crash is going to be substantial, and people are going to realize you can't just let governments print money like crazy. And if you have Bitcoin as a standard, like gold used to be, then that would limit countries from doing that. And of course, there's going to be some other regulations, but that's going to be the big lesson out of this is that, everybody watches these governments just print money, and they, in the back of their mind, they go, well, that can't be true, but it's been working for 16 years now, since 2009. So people actually think, well, and they look at me as the crazy guy because I'm saying, no, this will not stand. You cannot grow an economy forever by printing money out of thin air. It has nothing to do with innovation, investment, hard work, work ethic, all these other things that we know work long term. Okay, so this is going to be a big reckoning because it is the next big thing, but it's also going to fail first. And imagine just the biggest crash in history was when the greatest industries back then simply took their shakeout in the middle of their upcycle. Those things were growing from 1900 to 1970. In the middle of that, you had the Great Depression. Every business cycle has a shakeout in the middle where the leaders are narrowed down and you go into the maturity boom, the last part of it, the last phase of it, which is like the 50s and 60s in the economy. So this is all natural cycles. Everybody's, confused now, thinking now we're on a road to prosperity forever. It's going to crash and people are going to go, oh my God, and cryptocurrencies are bullshit and blah, 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 blah. And they're just going to be confused. This stuff is all going according to the cycles. And each cycle is different. And one of the things I stress to long-term investors, there is no long-term portfolio. There are booms and busts every generation, 26 years up, 14 years down on average. Stocks do very well in those booms, and they're a horrible place to sit. Like from 1968 to 82, when they lost 70% of their value adjusted for inflation. Over 14 years. Imagine you were retiring then. Depending on your portfolio, it is going down your whole retirement until you die. So you need to understand these cycles and know when. And real estate. And real estate's the best sector because real estate has all these sectors. There's always something booming in real estate, although overall spending in real estate peaks at 42 with the trade-up home of families.
It's pretty wild. You're covering a lot of stuff here.
Before that, there's the vacation homes after that. There's the retirement home, blah, blah, blah.
You're covering a lot of stuff. Let's go into, because you said something that I think most people are going to be like, what? This guy's full of shit. He said, you think Bitcoin's going down to $15,000, $16,000 Bitcoin before we go on a boom, but inevitably you say it's going to hit 800,000, a million, but that's probably not until the 30s, right? 2030s is sometime. Why do you think we're going to lose that much? Because we've never gone down to a previous cycle's low before, so I wouldn't foresee us going below 60,000 down the road. So I'm curious, like, what methodologies you have to come up with, because you got a great track record. But people who are listening to this are going to go, wow.
That is a possible scenario that it would go back to more like that 40 to 60,000 range. If I were to show this chart, if I had to put a Bitcoin chart up and show it to a chart expert, and there's a lot of people, me and Robert Prechter and a lot of people I know that do nothing but look at charts. And this chart, Robert Prechter invented the Elliott wave, a whole cycle patterns and how you label all these waves and stuff in chart. They were to look at this chart, they would say the same thing I am. This has been a major bubble, a major fifth wave peak we're in, and it would just go back to the fourth wave low on the way up in 5 waves to the fifth wave top. That's all it is. That's where it would go. Now, it doesn't have to go there. But if you're just a chartist and you didn't know what this was, I tell you, any chartist I know, look at this chart blind, would say, yeah, well, it's a big fall, but it looks like this is going to have to go back down to the fourth wave low, which is $15,599. That's simple. I'm not saying it has to go down there, but that's where I would bet. But the point is, it ain't going to stay at 108 if we have a downturn. I mean, just if we have any sort of downturn slowing in the economy, the other misconception, Bitcoin is the safe haven. It's not a safe haven yet. It might be in 20, 30 years, okay? It is the leading risk set. Now AI is coming up. NVIDIA, is that a safe haven? Hell no. You know what's going to happen to NVIDIA? Goes up 20 times in a few years and it's going to crash 90 some percent. I'll bet the farm on that one. Anything that goes up that fast goes down. So Bitcoin, you have to understand what it's early stage. It is I didn't get Bitcoin at first. I just noticed it was acting like stocks like Amazon that I was using to track the .com bubble. Okay. I know. And I said, this has got to be the next big thing because it's acting like it. Well, the more research, a guy was speaking at my conference years ago, and he said, cryptocurrency is simply the digitization of all financial assets and money. And I said, oh, now I get it. Take a guess at how much financial assets there are in the world. Just take a wild guess.
It's about half a quadrillion or something, isn't it? It's crazy.
Yeah. It's $650 trillion. It's 6 times global GDP. It's the biggest financial number in the world that I can find. Okay. And when this guy says it's the digitization of all of that and connects all that and makes trading and everything massively cheaper. Blah, 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 blah. I mean, you can have shoe shine boys trading, fractions of Bitcoin one day, okay, for 1/10 of a cent a transaction. So that's when I got it. And it continues to act like that. And what I would expect in something in its stage of development, it has to have its shakeout stage and get down. There's 40,000 coins out there. Come on. I mean, what a crock. You know what a coin is? It's an inexpensive digital IPO.
Sure.
You know what it costs to go public and be tradable as a security?
Right.
Zillions of dollars.
Right.
That's a huge innovation, by the way.
Yeah, you can make a coin.
Tens of thousands of crypto companies to launch. Will they all succeed? No. 90-some% of them will disappear at the speed of light. But that's how innovation works also. That's a good thing. So this has just allowed, to me, a bigger innovation. And Bitcoin is the only thing Ethereum is the best multiplier of new applications. And Bitcoin is the only thing that could be that global gold standard for all crypto and financial assets. And so that's when I got, oh, now I get it. But I got it just by looking at how it was behaving. I knew it was big before I understood why.
It would be really easy for somebody to start panicking listening to, what you're saying and indeed say the sky is falling because you're positioning it as though this
somebody ought to be looking to get rich overnight. All you have to do when a bubble, now, first of all, anybody look at the stock market look at the NASDAQ or QQQ, NASDAQ 100, from March 2009 bottom up till the recent top. And you look at that chart and you compare it to past booms. If you don't think that's a bubble, then you're an idiot. You're blind and you just don't want to see it. Because it is, my problem is I can't compare it to the past bubbles. It's so big and long, okay? Bubbles burst, absolutely no exceptions in history. It's a good thing for this bubble to burst. It has allowed these 40,000 crypto entities to grow, launch that would never even gotten a chance in another economy. It's going to shake down to the ones that really work. And they're going to change the world, especially in financial services and investment. And why is that important? This is the first time in history, and I've studied history all the way back 10,000 years of human civilization, more in depth than most professors, okay? This is the first time in history. First, we got the middle class in the last century from Henry Ford and the assembly line, most important invention in history up until then. Now that middle class is becoming affluent around the world, more than middle class, and they will be the first broad groups of people to be investing for retirement and having a substantial amount of money in investments for retiring and living not to be to 80. They're going to live to be 100 and 120 down the road, okay? All of this stuff makes financial services more important than ever. And Bitcoin and crypto is coming at a time where it can restructure that entire industry to be far more efficient and far more accessible to everybody.
So what do you say to people that are investing in crypto and Bitcoin or even stocks now? You know, at what point do you wave the flag and say, get out?
I'm saying now because this should have happened. We had the first crash in 2008 to 9. I predicted that 25 years before it happened. Okay, literally down to late 2007 was going to be the peak, and we go into a major downturn, which would be like the next Great Depression. It did look like the Great Depression in 2008-9, and that's exactly why the central bank stepped on the gas and just printed unlimited amounts of money. Mario Draghi was the first one. He said, I will print unlimited amounts of money to keep these markets and short sellers from taking these markets down. And that's what they did. They created the next big bubble. Okay, so this is an opportunity. What you do, you get out here, even if you miss the last 5 or 10% or whatever. I think 2025 is the year it goes down. They've already held it off. It should have been 2020 to 22 when the economy was weaker from the demographic and other cycles. Okay, and the technology cycle was weak from 2020 to 2023. That would have been the ideal time, but they pushed it up. But you just get out and then you rebuy when they're down 60, 70, 80, 90%. What's wrong with selling Bitcoin at 100 to 108 and buying it back at 16 to 20 to 30 or even 40? The number that's a gift. You'll never make that much money that fast. So the problem with crashes is they come when things are very, very bullish and everybody's in. A bubble doesn't peak without every last idiot in the farthest trailer on earth getting in for at least $10. Okay, that's what bubbles do. Suck everybody in and then they flush everybody out. That's the problem with bubbles.
It's the economy.
People don't see the crash and they lose so much in it that they don't have the money to reinvest when it really is the opportunity.
That's what happens. That's what the rich know. So what is, like, we need to start watching just what Nancy Pelosi's doing, because this is going to be political theater. You know that they're going to, like, oh, Trump's going to do it, and then they're going to try to pull the plug. When do you think? When would be the most logical time? Like in his first 100 days, they try to pull the plug? Do they wait until September? I mean,
well, no, it depends on this. If I'm Trump and I know what I know, let's just say Trump thinks like if he did think like I did, if he knew what I knew and not what I think is going to happen, okay? Yeah. I would want this thing to happen tomorrow morning. I just walked into office. I'm not just walking into office on the 20th. You can't blame me. Reagan walked into the worst recession since the Great Depression in 1980.
It's political.
Nobody blamed him for it. It already started when he walked in. Mm-hmm. And then he looks like the hero when it turns around. And this will turn around by the end of Trump's term. It shouldn't take, if it starts in 2025, it should turn around sometime in 2027. And then he's up for re-election in late 2028.
Only 18 months, 2 years of downtime. That's pretty good. I mean, realistically, but they're not going to have it go down before Trump's fully entrenched, because they want to use that as political warfare for that next election. So they want to get. Who are
you saying is not going to let it go down? Who's going to stop this?
Who's going to stop it? Right. Okay.
The stock market is the most overvalued by far, and this is, for the first time, it's everything. It's real estate, it's crypto. I mean, there's nothing that's not bubbled, okay? When everything starts going, and real estate's the worst. People stocks, it's good to get out ahead, but if you don't see it and you see that first 40% crash, which kicks your ass, what you wait is for that 50% retrace and get out just down 20%, and you're not that bad. Real estate's not that way. Real estate starts going down and then it just locks up and you can't sell anything. So real estate is where people need to really, and real estate, and again, I lecture all over the world. I get the other thing I get a huge flack for is saying real estate's going to go down. Harry, you don't understand. Real estate never goes down. They're never making any more of it. We've got a global population bubble. Yes. But we got the biggest. And I mean, there's not even a real estate bubble comparable to this in all of history. This is way more unique for real estate than it is for stocks. Stocks have bubbled many times, and yes, they crash, but they come back fast. Real estate, the 2006 peak, which came before the downturn, happened because the bubble had gotten too big, and it took 6 years to bottom, 4 years after stocks, okay? So real estate is going to be the real humbug and danger for most people. And people are going to think, well, yeah, I'll just sit it out. Well, you're going to have that home for the rest of your life, no matter what age you are, to sit it out.
Wow, lots to digest there. And Harry, appreciate you coming on and share with us. Your website is harrydent.com. You guys can go here. It looks like Harry, I don't
Yeah,
think you've
I have
updated
a
your
free weekly newsletter you can get on just by going to that site. I have
right here.
hsdent.com, but that's the site to just go and get on my free weekly newsletter. You can't go wrong with that.
There you go. So, I think it's good to have a splash of what could be a very present reality. It's very easy to get caught up in the enthusiasm of the markets and the economy, and you're out there kind of waving the flag saying, hey, guys, maybe this is how you end up losing your money, and appreciate that. So thanks for coming
Well,
on today.
again, I got more resistance in the 80s predicting the greatest boom in history because everybody was convinced America had peaked and was done. We were losing all our best industries. Nobody was looking at all the new industries we were dominating, especially technology. So that resistance is not a reason to say, well, that guy's a nut. I mean, it doesn't mean I'm right, but it makes me feel better that everybody thinks this can't happen.
Well, I
Yeah.
think you should start your own coffee brand now, the Economa Coffee
Enema.
brand.
I want to say really quick. I know we're getting ready to wrap up, but I want to ask about this just kind of real quickly because I think that this could maybe be the precipice for some of the economa that we're about to have is with AI and robotics and things like. There's a lot of jobs about to be misplaced over
Yeah.
time, and
New
it just seems
technologies
like
are disruptive at first and they hurt the older industries. You're right
yeah.
about that. That's what
So,
the older industries have all the stock value and mass. The new technologies injure them, and that is a lot of what causes the crash at this stage.
mhm. Yeah, I can see that coming. I really want to say thank you for coming on. I familiar with your books. I've read some of the stuff, so thanks for coming on. Nice to meet a fellow Puerto Ricano. You don't really look Puerto Rican, but it's like it's you seem pretty nice anyway.
So what do you think, Trav? Do you think that that he's right on this? That they are going to crash the economy? When he says who, I think you didn't really answer that. Who's going to crash? But you're talking the powers that be, the globalists, right? That want to control the world, that have attempted to, failed to control America, and Americans said no, and we put Trump in
But they've
office.
done a hell of a good job draining funds. I mean,
Mhm.
sending all this money to different countries and all of this and just printing it out. And it's like billions of dollars. They go, oh, you know what? We don't have. It's almost like their last year, and they go, oh, hey, we don't have a debt ceiling, you guys. Let's just print as much as we want. And it's amazing how a lot of that ends up filtering back into the foundations of the global elite and the politicians that have been in office for far too long. Go and look at Nancy Pelosi's portfolio. She's killing it, unlike most anybody else who's killing it. And you should at least give her the stink eye if you love her or not. I'm giving her two stink eyes and a stink finger.
Nobody wants your stinky finger, dude. So I am more inclined to think that they don't want it to happen now because then they definitely get all the blame. They want it to happen once he's in office, if it's going to indeed happen. And I think my personal belief in do your own research and make your own decisions is crypto still runs. I feel like that this part of the cycle is going to happen in spite of all of these poor indicators. And then I see it being a great time for everything to crash. Like, can you guys just print a lot of money for us, make us our 10x, and then you can screw us?
You have our permission. Yeah, that's
Yeah.
what's going to be. So, this bull run would end in September historically.
Hmm.
I could see them pushing that up right after sometime after Trump's first 100 days. Maybe when he starts implementing his tariffs and they try to blame it all on his policies, right? You could see that. And it's going to be interesting. And then, you're going to have the Doge, the Department of Government Efficiency coming in and finding all these areas where wasteful stuff is spent. So it's going to take a little time to kind of shake that out. But the powers that be don't just hang out on their own and say, all right, well, you got us, you guys. Good luck. They're going to do as much as they can to give us the stink finger, and I don't want their stink finger either, Joel.
I don't want I don't want their whether their fingers stink or not. I don't want them anywhere around me. I want them to
Finger
go.
it.
I'm gonna give them a taste of their own medicine and send them a case of economa. Economa is that what we called it? Yeah, and a coffee enema.
That's good. It's economy.
That's nice. Well, listen, again, just to reiterate, we're going to be in Florida. We want to see you guys there January 22nd through 24th. We're going to be hanging out. Maybe we'll have a little spontaneous bad crypto meet up type thing. And we'll just chat. We'll talk crypto. We'll talk
That'd be really
NFTs.
good, especially the night of the 23rd. Like, so the night that we speak, typically I'm dressed nicer that day. And so and I'm like, all right. And I got my recharge back and I'm like, okay, now I can party a little bit. I normally won't party on the 22nd because I got to keep my voice. But then once I speak, then I'm like, all right, let's go. Now I might actually even drink some drinks that night and partay a little
You might
bit.
have a coffee enema.
I'm going to have an
economy.
economy. It's going to be good.
All right, the code is bad crypto at wagme.miami, 30% off. Come join us there and shoot us an email. Let us know you're gonna meet us out there. badcryptopodcast@gmail.com. We appreciate you guys. We'll catch you again next week. Until then, be of staying of badness. I suppose I should say it like an Indian voice. Until next time, please be of staying of badness.
Who's bad?
The Bad Crypto Podcast is a production of Bad Crypto LLC. The content of the show, the videos, and the website is provided for educational, informational, and entertainment purposes only. It's not intended to be and does not constitute financial, investment, or trading advice of any kind. You shouldn't make any decisions as to finances, investing, trading, or anything else based on this information without undertaking independent due diligence and consultation with a professional financial advisor. Please understand that the trading of Bitcoins and alternative cryptocurrencies have potential risks involved. Anyone wishing to invest in any of the currencies or tokens mentioned on this podcast should first seek their own independent professional financial advisor.